Welcome everyone to the latest blockchain.com podcast. I am Garrick Hileman. I'm the head of research at blockchain.com and a visiting fellow at the London School of Economics. And I'm very excited to bring to you a conversation today with Yuriy Anosov from Anchorage. He's the head of trading there. We're going to be talking about markets, Anchorage, what they do in the crypto space, and all the incredible interest their company and platform are generating. And we're coming to you today also with a new all-time high for Bitcoin and Ethereum and other crypto asset prices. So very exciting day to be talking with an expert about trading in markets like Yuriy right now. So Yuriy, welcome.
Yeah, thank you for having me.
Great. Well, let's maybe just start off with a little bit about yourself. We'd love to hear about your life before crypto. And, we always like to ask people how they first earn their first dollar. That's a kind of standard blockchain.com question for all our guests and actually our new employees. And then, how you learned about crypto and why you chose to get involved.
Sure. Well, thank you again for having me. Absolutely great to be here during the all-time high. Definitely a great milestone for the industry and Bitcoin. Let me start off maybe with the first dollar question. I earned my first dollar, and this is maybe a more common one, as a caddy on a golf course. I think I was 14 at the time. I remember I wanted to work in fast food, but McDonald's wasn't taking anyone below 15 and a half. So it was golf caddying up until I was able to become a McDonald's employee. So that's my first dollar story. And then, to go into my background a little bit, just to kind of let you know how, and the audience know how I got here into the digital asset trading seat. After high school, I joined the military, the United States Air Force, did that for about 6 years. And about 1 year into the service, I realized that, well, I should probably, go to college. That's what, this was, 2000, early 2000s. This is what I should be doing, so I can become an officer instead of an enlisted, airman. So I went to college, started out with, aerospace engineering was kind of my target. But after about, a semester of that, I decided that, finance was a little bit more interesting at the time. I took some intro to business classes, as part of the kind of engineering, like the base curriculum. And I really liked those a lot more than the engineering courses. So went forward with a finance degree. And by the time I was a senior and had the whole business school academia under my belt, I decided that, well, finance actually seems a little bit more interesting than maybe being a career military officer. So I decided that I will try and join one of the big banks. So a bunch of interviews later, I got a position in the operations division of Goldman Sachs in Salt Lake City. And as a first job, post-military, it was a little bit of a culture shock, but I was able to adapt reasonably quickly to it. And I stayed in Salt Lake for about 2-3 years. During those 2-3 years, I realized how the bank works, how the trading desks work, and started understanding that at the end of the day, I really want to be as a trader on a trading desk. So started developing a plan on how to move forward and get to that goal, right? So like every other person with those same aspirations, I started taking the CFA exams. I figured out at the time how to move from Salt Lake City to the New York office, even though that was very difficult because Salt Lake was growing. Just for some context, I was employee maybe number 200 in that office. Now I think they're past 5,000. So everyone from Jersey City and New York were coming into Salt Lake, and I kind of figured out how to finagle a way out to New York. So did that. But the last step I think I was advised to do is to get an MBA. So I figured, all right, well, what's the quickest MBA you can get? I saw that INSEAD was a 1-year program. So I went in, did the MBA, and then I came back to Goldman and joined the fixed income division in Goldman Sachs Asset Management, the asset manager side of the company. So did that for about 4 years. The first 2, I was a product manager. Then a trading seat opened up in the money market desk. Immediately went for it because very rare that those seats open up. Just for context, the money market portfolio management team, the average tenure there of the PM/trader was in the teens as far as how many years we've been around. So even though I had at the time maybe 7, 8 years at Goldman, I was still by far the most junior trader and PM on the team. So yeah, started doing working as a repo trader on the money markets desk, and did that for about 2, 3 years. And then I thought it was a good time. I was kind of in my younger 30s and thought that it's time for me to try out my entrepreneurial muscle. And I was getting into crypto a little bit, just very basic things, just buying, Bitcoin on Coinbase. Thought I'd, try out to join crypto as well as a more small fund. So I joined Galois Capital, which was ran by one of the OGs of crypto, if you will, Kevin Zhao. And I was one of the first 5 employees at Galois. Did that for about 1.5 years, grew the fund to about 15 employees, also much higher AUM. And at that time, started speaking with Nathan at Anchorage, and it was a very good opportunity to come help build the brokerage business on top of Anchorage, which was a institutional grade custodian at the time. And and now we are here about 1.5 years later after I joined, and the brokerage business is doing great, doing hundreds of millions of dollars in volume every month, and hoping to grow even more.
That's great. Thank you for sharing your full background there. So a couple things we have in common. I too got a start in McDonald's pretty early in my life. So it's nice to know that there's other people in crypto and also an ex-investment banker as well, who kind of went through the McDonald's route into life. So for all the folks out there in McDonald's right now, hey, you can turn out like Yuriy. There's potentially very, very bright futures out there for all of you working in the fast food industry. But I also did a 1-year MBA at IMD, INSEAD's kind of rival in Switzerland there. So it's funny, we have a number of things in common that are interesting to think about in terms of the path to crypto and how these things intersect. But that's great. So I'd love to now. You touched a little bit on what Anchorage is up to, but I think Anchorage is definitely a known name in the space, but relatively new compared to certainly companies like Coinbase that are going out public this week. Big news there. A lot of crypto firms talk about becoming a bank. And I want to set up, of course, what you guys are doing in that regard with regards to, the regulatory approvals you've gained around banking. But yeah, tell us a bit about Anchorage and what the plan is for Anchorage and what you've done since kind of first launching as a custodian.
Sure. So the goal of Anchorage is to enable institutional participation in the crypto ecosystem, right? So, some of the things you mentioned, like the bank charter, that we received earlier this year from the OCC, for example, does exactly that in fulfilling that goal. Having the bank charter allows us to work closely with some of the incumbent banks that, I think are realizing that, they need to have some sort of a crypto business. Every bank is different as far as what that means to them, but they do need to make sure that first and foremost, that whatever their participation is, the assets that they will hold on behalf of their customers or on behalf of the bank itself is secure, right? So, and that is exactly where Anchorage, comes in. Is our custody platform absolutely allows for the secure holding of any crypto assets, and also allows the efficient, movement, trading, transfer of those assets as well. So most banks, it makes a lot more sense for them to work with somebody like Anchorage to build out, their crypto platforms, especially when it comes to, the tech behind it, rather than, build it in-house. Because, like you mentioned, Anchorage, although we are young, we have been, especially the custody business has been around for 3 years. So, we do have a good experience of, what it's like to integrate different assets, make sure they're safe, make sure they're, quick to transfer while preserving, the safety and security of those assets.
That's great. And not too many crypto firms have pursued, banking charters or state level banking licenses. I mean, there's been a lot of talk about this, and we've seen progress in, states like Wyoming with Kraken and what Caitlin Long's doing there. But are you surprised that more crypto firms have not obtained a banking license? I mean, I know the hurdle is quite high, of course, to get there, and maybe you want to speak to that. But is that something you're expecting more firms to do, or are some firms, clearly trying to stay away from obtaining those kind of banking licenses and charters for various reasons?
Yeah, hard to say. I will say that obtaining the bank license, we were the first, company to do it that's a native, crypto company. And I think a lot of the other firms, they're kind of looking at, well, what's going to happen with Anchorage? How are they going to use it? How is it going to enable, further business lines? And maybe that they're being a little bit more reactive. Now, that's not to say other crypto native firms are reactive. A lot of them are very obviously proactive, but there's a lot of different paths that they can take, right? Bank charter is one of them. We definitely wanted to enable, a lot of the established institutions to use crypto. So we thought that was probably the best regulatory way to do things. While other companies, they may have different goals, and maybe there's different regulatory, pathways to get to those goals. But yeah, I think there's going to be more, crypto companies applying for bank charters, in the near future, distant future. But I do think that a lot of the folks are probably looking at Anchorage to see exactly how we're going to use this charter to enable our businesses.
Great. I want to come back to what Anchorage focuses on: institutional, investors and the institutions that are coming into crypto. I mean, when Anchorage got started in 2018, and even before that, there was all this talk of the herd, coming from Wall Street, and it kind of failed to materialize in 2018. I think that was a big part of the reason we saw such a severe bear market. Is there was a lot of excitement, and it just didn't show up. But something's obviously changed in the last, seems like particularly 12 months. And I wondered if you could talk about that change in the context of where we were, say, maybe in 2018, and what happened. How did institutions start to become more comfortable with this asset class, and how that whole process unfolded?
So I think it all starts with the pioneers, with however you decide to look at that term. So let me just use, Michael Saylor, I think everybody knows as the main example here, right? So, one of the most interesting things that I've ever heard him say is that, I think it was Pomp, he asked him, well, Michael, like, how did you get to the point where you were able to buy all this crypto and kind of share it with the world? And he said, well, it wasn't an overnight decision. It took 9 to 12 months of, working with our compliance teams, with our legal teams, in order to get that massive buy, right? And then when it actually happened, to the casual observer, it may seem, well, these guys, the CEO here is very, bullish on Bitcoin. So he decided all of a sudden to buy Bitcoin to, diversify his balance sheet. But a lot of people don't realize, unless they listen to these podcasts in detail, that it did take a long time for them to get there, right? And what I think that can be drawn as a parallel to is what's happening now. There hasn't been a lot of companies, coming forward saying that we're also diversifying our balance sheet in the same manner, because I think they're also currently somewhere in that 9 to 12 month process. So, as these companies, get to the point where everyone on the board, in the legal department, compliance department, executive suite are on the same page that they do want to diversify into Bitcoin, we're going to see that come out. Some companies will be public about it, others won't, and then it'll show up obviously on their, their SEC reporting. But that's what I think is going to happen. So it all starts with the pioneers, and there's other parallels like that we can draw with some of the other institutions, such as endowments from universities and things like that, that we can draw to.
Great. Now, looking at some of the barriers to institutional adoption. Custody, of course, is a big one. This is a very different type of asset, a bearer asset, than a lot of institutions are familiar with and used to dealing with. But there's a whole host of other barriers: volatility, concerns around that, concerns around classification in terms of how to treat this for tax reasons, or how to think about it from an investment portfolio perspective. I was wondering if you could just kind of run through some of the traditional kind of barriers to adoption that Anchorage encounters, and which ones you're seeing more progress on, like less friction, more, I get it, we don't need to spend as much time on that, but I still need to get more comfortable with, say, maybe custodianship and how that works. What's your view there?
Sure. So I think there's two main barriers to entry, right? Like one being more technological, other one, just like you described, is exactly what it is in the regulatory space, the tax space, right? So maybe let's tackle the technology part of it first, right? So we have clients of all different experiences in the spectrum of like, we absolutely get exactly what's going on here and how to work with crypto, to, well, I don't understand like why a Bitcoin transfer doesn't require, something that I'm used to in maybe a traditional space where I'm transferring, a stock or a bond or something like that. And then everything in between, right? What I've found is that the understanding of how the technology works and why it's secure and why it must be taken care of the way the procedures are currently set up. People usually get that. I feel pretty fast for the most part. Right now, you do see sometimes with especially more institutions that have been around for a really long time that have procedures that are written in stone, right? Sometimes there are small portions of the process where like, well, this we're not too comfortable with. We actually want to see it done another way, right? So it also teaches companies like ours that we need to also adapt a little bit to the clients as well. It's not just like, well, here's our product and this is how it works. Go ahead and follow all the procedures. We also take feedback, obviously, during onboarding sessions, especially with like the really big incumbents. And, it's sometimes like when they say that they want to do something, maybe it doesn't make sense to us because we're so used to, running our business, right? But then when we kind of think through it and, talk with the customer a little bit more, it actually may make sense the other way. So we try to meet, halfway there. And then usually it's relatively easy to get to a solution. Now, on the other side of it, the regulatory piece, I believe is a little bit more difficult, right? I think, our Anchorage's involvement with a lot of the different regulators has been overall positive, right? We find that behind the scenes and behind what the media may say, like a lot of the regulators are very actually curious and very deeply involved in the space and do a lot of research and understand it very well, and work with companies like ours to make sure that what we're doing is both secure and also meets all the regulatory standards that they have for us, right? So that part I think will keep evolving. I think if I look at where we were, in 2017, 2018 when I first joined crypto, it was very gray. Like it was very difficult to figure out like how we want to run things, how we want to set up, how we want to incorporate. And I think now it's a lot more clear than it was. But there's still a long way to go, which I think the regulators, as well as the different associations that represent crypto companies, are doing a pretty good job adapting to.
Yep, that's a great summary. I agree with you on the regulators generally being very supportive, very pro innovation, understanding the economic opportunity for countries and jurisdictions that are able to figure out a way to embrace this innovative technology while also safeguarding traditional systems, the various investors and people out there participating. So, but I tend to think that regulators have created a really nice space in a lot of places like the U.S. For this sector to grow. So let's turn, speaking of regulation, let's turn to a topic that receives a lot of attention. One of the kind of key catalysts that's on the horizon, Bitcoin ETF. It gets at kind of issues around liquidity and market structure, and how much of the crypto asset trading markets are sufficiently transparent and under kind of surveillance for concerns around market manipulation and whatnot. There's traditionally been a lot of concerns about various exchanges for marketing reasons, particularly overseas, inflating their trading statistics, and so the reliability around some of the data in the space has been a question. I think we've seen a lot of improvements, but I wanted to hear your perspective on that, and if you did want to comment on a Bitcoin ETF or anything else around kind of liquidity and kind of market structure, would love to hear your thoughts.
Sure. So let me cover the ETF, I guess, first. So I do think the ETF approval is going to be positive for the industry overall. We kind of seen that with some of the ones that are being approved, in Canada and the TSX. There's volume coming into those products. We've seen the more products like the grayscale, trusts. The premiums have been dying down a little bit because people have been rotating into the ETFs, so much that I think Grayscale is now, looking to launch an ETF of their own. And I think, if I read it correctly, Galaxy's, filed for, I think, the 9th ETF application that's outstanding right now. So there's a lot of these guys coming in. So obviously, I think the industry thinks that this is a really good thing, especially for, retail involvement, just because, just talking with like a lot of my non-crypto friends, I do realize that it is still a little bit difficult to maybe like buy a Bitcoin like physically, right? So an ETF is something people are familiar with. Everybody kind of has an E-Trade or Robinhood account nowadays. So that I think is going to be very positive for the industry overall. Now, as far as liquidity, volume, inflated volumes. It definitely has gotten better. I mean, I remember, when we were doing OTC business, at Galois back in 2018, sometimes, you go to CoinMarketCap and you kind of see, some sort of a volume figure of like some token that, is number 40, number 50 on the CoinMarketCap scale. And, you see it like, wow, this thing looks pretty liquid, right? But then you go to those exchanges and you try to trade this thing and like you see really quickly that, wow, this thing is way too sensitive for like, the participation rate that I was thinking and things like that, right? So fast forward to today, it's obviously gotten a lot better. There are companies out there, I think Messari is one I like using, that they have kind of these volume statistics that are, quote unquote cleaned up, right? And I think they're pretty accurate. Now that, since I do a lot of the trading and do a lot of these algos, I can kind of see, when I'm pushing volume through the marketplace, that I can see how it reacts, and it tells me a little bit like how realistic those volume figures are. And I think right now they do a much better job of reporting them. And honestly, other participants who use a lot of these exchanges and inflate volume, I think they probably just use them a lot less, right? I'm not going to name any names, but some of the exchanges that were used back in 2018, aren't really around anymore, or at least used a lot less. And I think the primary exchanges that do have the liquidity, report correct volumes and are the recipients of the customers because of that.
That's great. So let's talk about, building on this liquidity discussion, and this is something Michael Saylor, who you mentioned earlier, I think spoke to when he was talking about, his investments in the space and how he's been very impressed with the liquidity that is available to build a sizable position without, moving the price, slippage, and so on. Can you dig more into that and how, like a BlackRock we've heard is kind of dabbling, I forget the term they used, but institutions with trillions, obviously they can't at this point, move in maybe in a massive way without, but talk around kind of what kind of sizing and liquidity is available with positions and what you're seeing today.
Sure. So yeah, I believe dabbling is the right word. I believe that was Rick Reeder on CNBC, who I'm a big fan of. I've been listening to him way before I knew what crypto was. Look, BlackRock does all of their Bitcoin investment via futures. That some of their funds are allowed to do it, right? So the futures volumes have absolutely grown over the past year, especially back in 2020, exponentially, right? CME, I think, has done a great job taking leadership in that regard, right? Like adding the Bitcoin futures, adding the Ethereum futures, and now I think the mini Bitcoin futures, were launched or about to be launched, right? So I think a lot of people are familiar with CME. Everybody who has an NFA registration, and is used to trading in those, for them, the Bitcoin futures is just another product that's already like in the same regulated space that they're very used to, right? And then, if we look at some of the crypto native stuff, I think those marketplaces are a lot liquid as well. Again, I keep alluding back to 2018, but I think there's a lot of good parallels here. Back then, BitMEX was the end all be all with the perp swap, right, and some of their future, right? But now, there's probably 3 or 4 or 5 very liquid exchanges where a perp or a futures product is offered, that you can go in and take a position in over, on the different exchanges, right? And then, I'll touch on option markets as well. I mean, we've seen also, this recent expiry, I think, had a record, volume as well. On Deribit and other platforms that offer options are also, I think, have experienced crazy growth in volumes. Now, let me come back to maybe something, that I have, more insight to that I think would be interesting for the listeners here. At Anchorage, because we are a custody company, at its core, we deal more in the physical Bitcoin, and that because that is what our clients usually buy into. They want to buy it here and they want to store it here in the secure custody aspect of the company, right? So, how much can you do of volume on a daily basis? Well, it is very liquid, like you mentioned. There has been days at Anchorage where we've done, over $100 million, for example, in Bitcoin, right? It's you have to be, very methodical about how you go about that, to make sure that, you're not moving the markets, you're executing, with proper principles of execution, but it's very doable, right? We can probably even do more if there was a demand, right? It shouldn't be, too much of an issue. Now, Bitcoin has gotten there, right? But, if you look at the rest of the market, it's still, liquidity maybe is a little bit lower, probably can't do as much volume as, you can in Bitcoin. But because of some of the things that we've seen kind of in the DeFi space and some of these alternative liquidity pools that have not really been tested at maybe a more high level are coming in, which will expand the liquidity.
Mm-hmm. Great. I know we're getting close to our time limit here, but I want to, of course, ask you about the current markets, all-time highs today. Recently we've been talking on our own monthly outlook about how, there's some things that remind us of 2017. We've seen the return of things like the kimchi premium on a few occasions. I'm sure you remember that, where, the South Korean markets were often trading at a premium, assets like Bitcoin and other crypto assets to prices, say, in the US. We've got, these dollar borrowing markets, these money market protocols and lending operations. Blockchain.com has, of course, a significant institutional lending business, and as do a lot of firms now. And the cost of borrowing stable coins has been climbing. There's questions around the amount of leverage in this space. At the same time, we see, crypto assets like Bitcoin, which are often compared to gold, still trading at roughly a tenth of the total market value of gold, which from our perspective, we think is quite positive to the upside potential. But what's your perspective on the markets today and Bitcoin and Ethereum, the two big ones, as well as what's happening further down the leaderboard?
Sure. So yeah, let me start off with the kimchi premium, right? So that's something that's been around a couple of years ago and just came back over the last month. And I think if I got my numbers right here, back when Bitcoin a few days ago was at 58, 59K. I think it touched something like 66K in Korea, right? If I have that right. But it has retreated since, right? But to me, what that really shows is that we have such a long way to go to really arb out things like that and make the markets a little bit more efficient for every participant, all over the world, right? I am no expert on, the Korean regulatory environment, but I can imagine that, there's other pockets in the world where there's other premiums, maybe at a much smaller scale that need to be, arbed away, made more efficient. And I think, the crypto industry will work, over the next few years, obviously, to get all the pricing, globally in line, which just kind of shows the maturation and the efficiency. So that's just my opinion on that piece. Now, with a stablecoin borrowing, that's a very interesting one, right? Because you have this kind of dichotomy, right? You have, these 7, 8%, 9% borrow rates for, the dollar equivalent stable coins, whereas, in the traditional space, rates are obviously near record lows, right? So, as a retail investor, and even an institutional investor, you're thinking, well, I can get, 50 bips here, maybe 75 bips somewhere, by putting my dollars in a, commercial paper money market fund or something like that. Or I can, go to one of the, lenders in the crypto space, Anchorage being one of them for institutional customers anyway. and get some of these higher premiums, right? So that's definitely an interesting dynamic. Now, what makes the crypto side of it interesting is that we have the 24/7 markets that allow, for example, a lender to have, a liquidation engine that runs 24/7. So if, at 2 a.m., one of our customers, collateral goes, down past like a certain pre-agreed, liquidation ratio, there are very easy ways to make sure that that client is brought back in line, right? And, before you even get to that, because you can ask a client to, for a margin call to deposit more assets, they can do that 24/7 as well, right? Whereas in the traditional markets, right, you issue a margin call, it's for the next day, and who knows what happens, in the markets like overnight, right, with the futures, et cetera. There's just a lot of these kind of imperfections, if you will, because of the opening and closing and not the 24/7 trading. So I think the whole 24/7 dynamic is something that is going to keep being adapted to by more of the traditional players and the way the traditional infrastructure works. And we should see more advances, I think, over the next 3 to 5 years to get markets to a truly 24/7 area where a lot of these inefficiencies can be done away with.
Yeah, that's great. And I mean, do you have any kind of forecasts or things you're looking for in terms of, price targets? Do you feel like crypto assets are fairly priced right now? Do altcoins, I think the top 100 crypto assets now on CoinMarketCap each are registering over $1 billion in market value. So it's just incredible to see the depth now across this space of coins accruing value that deep into the leaderboard. But yeah, any views on where things are going or current health of prices?
Sure. So look, no specific price targets. If I could predict Bitcoin pricing, it'd be a whole different story here, right? But I think it's obviously going to keep growing. Like I'm going to allude back to what I said earlier with that, 6 to 9 month kind of approval cycle, or 9 to 12 months, I believe I said, for corporations to get into crypto. I think as that starts, getting to the end of that cycle, right, and people and the corporations are going to start buying in, obviously there's going to be more demand, which, will reflect itself in the pricing of Bitcoin. As far as the other assets are concerned, I absolutely love seeing, Bitcoin domination of the crypto AUM, get lower, right? Which means the other assets are growing as well. I think there's really cool kind of dynamics that the market's trying to figure out. Is Ethereum going to be replaced or at least complemented by another smart contract platform that's going to be used widely? Will you be able to use some sort of a DeFi exchange, not just with an Ethereum token, but maybe with something else, right? That alleviates the fees a little bit. Like I think that's going to be an amazing problem that gets figured out, and I think a lot of value will accrue to those companies, right? And I also think, another cool thing that doesn't get much play is that there are a lot of hedge funds now that aren't just, ARB funds or market makers or, players in the algorithmic space. I think the fundamental funds are really kind of starting to come in, right? I think, in 2018, Arca was one of the main players, in that type of a setup, right? And they've done pretty well, obviously. Multicoin is another good one, right? But overall, I think there's a lot more of these players that are fundamentally investing into projects based on, what they're doing in the space, what their, future possibilities are. And I think there's going to be a lot more of those players, which will accrue a lot more value to projects that are doing a good job, filling in whatever void is missing by the marketplace. As I explained, is very, inefficient in different pockets still to this day.
Awesome. Well, that's a great place to finish up. But before we let you go, Yuriy, where can people go to learn more about Anchorage or to follow you, get access to more of your insights or the company's insights? Where should we send people?
Yeah, absolutely. Thank you for asking. Anchorage is at www.anchorage.com. There's if you're an institutional investor and are looking for more information, there's a link there that gets you directly to our sales team. Usually somebody contacts you very quickly after that, and then we usually just listen and see what your needs are and let you know how we can help you out. For myself, I'm on Twitter at Yuriy Anosov, not the easiest spelling, but it's there. So that's probably the best way to get in contact with myself.
Excellent. Okay, great. Well, Yuriy, thanks so much for taking time today and sharing your perspective on markets and telling us more about Anchorage. And we wish you the best.
Yeah, absolutely. And thank you very much for having me, Garrick. It was a pleasure.
Great. Have a good day.